Hey guys, welcome back. I have missed you guys, and it's been a while since I've recorded a video. So, I wanted to come back with something that I think is very meaningful. So, today's video is going to be pretty important. We're going to talk about the news from the week. As you recall, there was a Fed press conference. I want to talk about that just briefly. Also, we're going to talk about the performance of my portfolio. And there were some cool dividends that were announced this week from the stocks that I have in my portfolio. I want to share all of that with you. But also, I've taken a little bit of time away from YouTube, and I thought about what I want this channel to be. And I want to share with you at the end where I plan to head with this YouTube channel. So if you're interested in that, stick around. Hey guys, welcome back. Kevin Burgess back again with another video. It has been a long time. I have really missed you guys, and I wanted to share some things with you today that I think are important for my portfolio and maybe something for you to consider in yours. If you don't know who I am, my name is Kevin Burgess. I am a retired dividend growth investor. And one of the things I wanted to do in retirement is to share what I do with my portfolio. You might, get some good ideas from that. You might see some things that you don't like that I do, and then therefore avoid some things to do. But either way, it's valuable to you, and I'm glad you're here today. I'm glad to be back in front of this camera, and I love interacting with you all. So with all of that, let's go ahead and get started. So the news of the week, the Fed had a press conference, Jerome Powell, and he announced that they were not going to raise rates this time, which was not a shock. I mean, everybody kind of expected that, but he did have this bit of a dovish tone, and I think that helped to kind of fuel the market this week. And then it was kind of followed up by the jobs report, where we only added about half as many jobs in the month of October that we did in September. With that slowdown in jobs, the market is beginning to think that the Fed is going to be a lot more cautious as it moves forward in raising rates. So with that, the markets increased this past week, and they went up quite a bit. So let's take a look and see what happened with the S&P 500 this week. You'll see that over the past 5 days, the S&P 500 closed the week at 4,358 points, which is up almost 241 points on the week, or a 5.85% increase. Let's take a look and see what happened to my portfolio overall. As of the end of day on November the 3rd, my portfolio for the week was up 5.89%. And what I'd like to do is I like to compare my portfolio with SCHD. And for those of you who may not know what SCHD is, it is an ETF that focuses on dividend income. And so the purpose of SCHD and the purpose of my portfolio are relatively similar. So I like to compare how my portfolio is doing compared to SCHD. And as you can see in the 1 week performance, my portfolio is up 5.89%. For the month, my portfolio was up 4.09%. Over the last 3 months, however, it was down 3.77%. Year to date, I'm up 7.36%. And then for the 1 year, the 12-month period, I'm up 12.7%. So when I compare that to the SCHD total return, they had a 1 week return of 5.01%. The 1 month is 1.2. They were down 4.8% in the 3 month period, down 4.49% year to date, and then up 0.94% for the last 12 months. Okay, now that that's out of the way, I want to talk about 5 stocks that I added shares to my portfolio in the last week or week and a half. I think these 5 stocks are important, at least to consider, for every dividend growth investor. I want to share with you what those are, what transactions that I made. So without further ado, let's get started, investors, looking at these 5 stocks. Stock number 1 is U.S. Bancorp. Now, US Bank is the largest non-global systemically important bank. They call them a non-GSIB bank. They have pretty diverse businesses. They have a payments business. They have corporate trust, wealth management, and mortgage banking. They have a national presence, so they're not necessarily a regional bank. They do have a national presence. They have solid tier one ratios. Most recently, their ratio was 9.1%. They should easily exceed the 2024 tier one minimum of 7%, which is believed to happen, I think, at the end of 2024. So they should be fine for those tier one requirements. They are extremely undervalued. So as I take a look at the Morningstar valuation here, you can see that they say USB is trading at a 32% discount. That's pretty significant and what I would call an extreme undervaluation. The fair value, according to Morningstar, is $52, and they're trading around $35.49. And they have, according to Morningstar, a wide economic moat as well as an exemplary capital allocation process. To kind of give you a sense for what I did, the last bullet point here is that on October 25th, I bought 100 shares of US Bank Corp at $31.31. You can see that it has already jumped a little more than 10%. So I bought it at $31.31. It's $35.49 at the end of the day on November the 3rd. So that seems like a pretty good move. And, I'm not timing the market. It just happened I had some cash that I needed to invest. And here is where I decided to put it. Of course, a lot of stocks went up during the week, so it's kind of hard to tell, but this looks like a pretty decent move. When I look at it in my portfolio, it is about 2.1% now of my total portfolio. It's at a gain right now of 4.6%. It shows me with an annual income just from the dividends of this stock of $1,440. And it's 3.6% of the income. They're providing a yield on cost for me of about 5.7%. Let's take a look at the second stock that I bought this past week or so, and it is Kilroy Realty. And those of you who follow my buddy Ryan Williams will know that this is a stock that he really likes. I like it as well. It is Kilroy Realty. KRC is the ticker symbol. They are a holder of commercial real estate. They're a real estate investment trust that has properties focused in Los Angeles, San Francisco, Seattle, and Austin, Texas. They own about 119 properties with approximately 16 million square feet. They do have challenges. One of those challenges is the remote work environment that we have since the COVID pandemic. And also their CEO has announced his retirement at the end of this year. They are, according to them, on the final stretch of finding a replacement CEO, but that is certainly a risk for Kilroy Realty. According to Morningstar, they have no moat, but they do have an exemplary capital allocation. They are extremely undervalued. According to Morningstar, their value is about $63. They're trading at the end of day on Friday, November the 3rd, at $31.50, exactly 50% discount. So the way I kind of look at it is kind of like a half off sale. I mean, I get 2 for 1, right? I can get 2 shares for every share that I buy, the value of 2 shares. So first of all, I think Kilroy Realty is a quality business. They have solid financials, but also, them being so significantly discounted, I think this is a great time to pick up some shares of Kilroy Realty. You'll notice when I go back through some of this information that I don't back up the truck and load it up in my portfolio, but having some of these shares, in my opinion, is not a bad place to be for a dividend growth investor. So let's pick up where we left off here. On October the 25th, I bought 250 shares of Kilroy Realty at $27.40. You can see that the price went up this past week, and it's now at 31.5. So $27.40 got me down to an average cost per share of $29.99. I already had some shares, obviously. So now I have a total of 500 shares. It is 1.2% of my portfolio with a yield on cost at 7.20%. So I think this is positioned very well in my portfolio. I'm happy to have this stock at an average cost just under $30. Okay, let's move on to the third one, and that is Altria Group, ticker symbol MO. Now, Altria, if you're not familiar with them, you've probably been hiding under a rock, but Altria Group is a leading tobacco manufacturer in the U.S. Part of the challenge is it is a sin stock, and it's leading to secular contraction. So what does that mean? That means that their volume is actually decreasing over time, and but yet their margins are increasing. So they're basically selling less product and making more margin on it. I'm not sure how long that goes on. I think it's a good medium term stock. I wouldn't consider it a growth stock for the long term, but for my income portfolio, it is a great tool to help provide income for my retirement. So it is, in my opinion, significantly undervalued. You can see that Morningstar has it valued at $52. It's trading around $40.67 at the end of the day. On Friday, on October 26th, I bought 100 shares at $39.20. So what is that now in my portfolio? It is about 3.2% of the portfolio market value. But because its dividend is so high, you can see my yield on cost is 8.88%. Because that yield is so high, it drives the percent of income to almost 10%, which to me kind of gets me to a place where I think I may not purchase much more Altria Group unless it gets down below $40 or even less. I may pick up a few more shares, but I'm a little bit uncomfortable having 10% or more of my income coming from one stock. But the cool thing is I was able to round out an even 1,000 shares of Altria Group in the portfolio. My average cost is $44.16. While that is at a loss right now of 7.9% of $3,490, it is lower than the fair value. So I'm comfortable currently with my Altria position. Let's move on then to the next one, which is Rowe Price. Rowe Price, again, is a well-known U.S.-based active asset manager. It has several strengths: its size, its scale, its brands, its fund outperformance, and its reasonable fees. It is, I think, undervalued. I wouldn't say it's significantly undervalued, but it is undervalued. And on October 27th, I bought 50 shares at $88.30. It has rebounded up to $95.67 as of November 3rd. The fair value, according to Morningstar, is $110. So if I look at my portfolio, it is about 3.4% of my portfolio. I am down on Rowe Price about 10.7%. So if I look at my cost per share of $107, it is below the fair value of $110. I may pick up some more of that. I have some room to move in the portfolio with Rowe Price. But, in order to do that, I'm probably going to need to sell off something else. And I haven't determined yet what I would sell off to pick up some Rowe Price. More to come on that, I guess. And last but not least is Parker Hannifin. Now, Parker Hannifin is a diversified industrial conglomerate with a wide variety of motion and control technologies. They have, strengths of being a company that has a large installed base of products and an exemplary distribution network. They are, according to Morningstar, fairly valued. On October 31st, I bought 25 additional shares for the portfolio at $368.322. And this is a great example, maybe to pause and take a look at this particular stock. One of the fears that I have, and maybe you have as well, is that it's a fear of averaging up. And so I was able to pick up some shares, probably around $275. This has been about a year ago. I picked up some Parker Hannifin at about $275. It then shot up to 325 based on their performance. The market was really happy with them. So I bought additional shares at 325, brought my average cost to around $300. Now and then subsequently the stock price went up above, well above $400 a share. I didn't buy any more at that time, but it came back down to about 368, and so I bought some additional shares, increasing my cost basis. But I believe it was the right thing to do for this company that I see a spectacular future in. So let's turn back to the slide. You can see I bought these 25 shares at $368, and the price now has gone back above $400, and it didn't take long. This was October 31st. On November the 3rd, after their earnings release, they were back above $400 a share. So you can see that their fair value, according to Morningstar, is $411. My average cost per share now, because I've added those shares this past week, is $323. So my average cost was around $300. Now it's around $320. But I'm okay with that because it gives me about a 2.4% position in my portfolio. I'd like to even have more, but I'm going to wait for opportunities, kind of like we had this past week. It's not a high dividend payer. It's a percentage of income in my portfolio is only 1.1%, but I believe its growth potential is really well worth it. You can see that the gain in the portfolio is 24%, about $5,897. I think Parker Hannifin has a tremendous future ahead of it. I don't know that I would be buying any above $400 a share, but when it got to 368, I was, thinking it was a pretty good price. And, at least for last week, that turned out to be a pretty good move. So let's take a look at some of the latest dividend increases for the stocks that I hold in my portfolio. On November the 1st, Main Street Capital raised its dividend again by 2.1%. We'll notice a little bit later that they have also issued a special dividend, so we'll talk about that in just a few minutes. On November the 2nd, EOG lifted their payout by 10%. That's their sixth straight year of dividend growth. They also issued a special dividend that's $1.50 per share. So, what's kind of cool is that with all these special dividends and regular dividends from EOG, it's about a 10% yield each year for holding that stock. Not to mention the growth that we've seen in that particular stock since we bought it a couple of years ago. Let's move on then, and let's look at Aflac. So their fourth quarter dividend had no change, but that was not the only news that came out about Aflac on the day. If you look here, the first quarter, the March payment is going to go up from 42 cents to 50 cents. That is a 19% increase. And it's also its 41st consecutive annual increase. And then lastly, we talked about this special dividend from Main Street Capital. They've announced that they're going to pay out a 0.275 per share special dividend in December, on December 27th. So that kind of wraps up the portfolio piece of this. I hope that was helpful. Leave me comments below what stocks you bought this week, and if any of this was helpful, or if you wanted to hear more about any particular stock, leave me a comment below. I'll be glad to share more. I just wanted to give you the information around what I'm doing in my portfolio, or what I have done in my portfolio. So now let's talk a little bit about the vision for the channel. I've taken some time and thought about what I think would be best. And what value could I bring to you, and what would be meaningful to you? Because one of the goals that I have is that you leave these videos more inspired about dividend growth investing and about investing in general. And just to be transparent, I have not been really consistent in my videos. So what I plan to do moving forward is to have one video per week. I plan to drop it on Saturdays, and it will be a wrap up of the week. It'll be, any transactions that I've made, any big market announcements for the week. Hopefully it'll be exciting and interesting to you. And then also having a live stream on Monday nights. So my buddy Ryan has a live stream on Friday nights. My buddy Russ has one on Sunday nights. So, I mean, what more could you want than have one with me then on Monday nights? And I think what that'll do is that'll give us really a day of the market and let us kind of see what's happening in the market for the week. And that'll kind of give us a bead on where we're going to head for the rest of the week. So that's going to be my commitment to you, is that I'll have one video on Saturday and one live stream on a Monday night. And there will be times, obviously, that I can't do the live stream, but I'll let you know ahead of time. And I think what I'll do is I'll do these live streams for about a month or so and get some feedback and see if it's something that's resonating with people. And if it is, we'll continue and kind of grow together in this investing world. So I'm really glad to have you along for the journey. I look forward to getting more consistent with these videos and having you along for that journey. Leave me some comments as to whether you think that's a good move or if there's something that you think I should do differently with the channel. But other than that, I'm going to leave you with that, and I will see you actually on Monday night. So have a great weekend, everybody. I'll see you on Monday.